Hey, it's Jim Yent from Golden Years Advisors. We're here to do our July update on the Rochdale speedometers as well as Clark Capital's economic gauges. So let's jump into the speedometers. July was a good month. We had a pickup of a new green or positive indicator. We saw the mortgages go from yellow to a neutral position to a positive green position. And that's because, as we've seen, rates are at all-time historic lows, 2.5% type mortgages. In addition, we picked up one red shifted to a yellow, and that's in an area that's very important. It's the corporate profits. With all the concern about COVID, we've seen the numbers that are coming out, the quick update on profits, just so you get it. We've had about 50 companies report thus far, a lot of the finance guys, and what we've seen is this trend. The big keep getting bigger. So the biggest banks are doing well. Tech's about to roll out. We're seeing the same thing happen, that the biggest of the tech ones will really profit well. So from a second quarter perspective, we're expecting to see revenue falls because of the shutdown, the lockdown, of about a 10% revenue drop year over year, and about a 44% for second quarter profit. So we're keeping our eye on that as the numbers roll in to see if it is that bad, but that's what we're expecting. On a full year basis, what we'll see is by quarter, we'll kind of have a reduction in those losses. So about half of a loss, both in the revenue and profit side in the third quarter. It'll shrink again a half in the fourth quarter. So on a full year basis, we expect to be down about 10% on a full year basis on revenue and profit. Shifting gears now, from a Clark Capital perspective, they've always had their 5 big gauges, and 2 of them have been wide open. The monetary policy as well as interest rates. The Fed is doing everything they can, and clearly there's been a lot of stimulus and we'll probably see more. So those are in full forward position. What we've seen is 2 things happen. As the market keeps rising, we're seeing the valuation gauge get more into the caution or the slowing area, because we're getting back to some all-time highs, not just from a NASDAQ perspective, but from an S&P and a Dow perspective. So a little bit of caution as we go forward with that. And then the economy, we went from literally a full stop to a kind of a half stop. And we know that's going to continue to be jerky as we go forward. Bottom line, economic things are improving, monetary things are improving, and so we've seen 3 good weeks of the stock market, and we might continue to see that trend going forward. That's the quick update. If you have any questions, as always, we're here, and we're always keeping our eye on the ball. Have a great day. Bye.